Welcome to the Less Insurance Defenders podcast. I'm your host, Lester De Alwis, and this show is dedicated to helping dental professionals build stronger, more profitable practices with less reliance on insurance. Today, I'm honored to welcome Laura Phillips, enrolled agent, co founder of the Phillips Group, and one of the sharpest dental financial minds in the country. Her firm has worked exclusively with dentists and physicians for over 15 years across more than 20 states, and Laura has been on stages at the Thriving Dentist Expert Panel and the Dental Transition Summit because when it comes to the financial side of the practice growth, she's the person in the room who actually knows the numbers. So today's episode is titled as The Numbers Don't Lie. Are you actually ready to drop PPOs? So we are going to get into what most PPO exit conversations skip entirely, the financial timing, the cash flow reality, and the blind spots that determine whether this move succeeds or falls apart. Laura, welcome to the show.
Thank you for having me. I appreciate it.
All right. So your work inside the dental practice, finances every day, right? When do you realize the financial side of PPO exits was being completely ignored?
Yeah, I really saw this when I would speak to a client or speak to a dentist, and
Mhm.
they tell me how busy their schedule is, how thriving in their own mind their practice is, but then there's a comment about their lack of cash flow or their lack of profit. So they're seeing the patients, they're every chair is booked, but there's no money in the bank. And that is where there is, a pretty immediate problem that something is going on. And so, I always say a busy practice does not mean a profitable practice. And insurances can really be the deciding matter of whether or not the profit is actually there, whether or not they're busy. And we've seen this honestly post COVID, it got dramatically worse. We've all dealt with rising costs. Inflation has been 5% every single year for the past five
Right.
years. So things are
Mm.
costing 25% more at a minimum from what they were pre-COVID. But as we all know, insurance fees have not gone up
Mm.
25% in that same time period. And so that is that moment of something is wrong in the practice. And, what can we do about that PPO exit and make sure that they can be successful for it?
Okay. Amazing. Amazing. Now, we looked at how things have been evolving. Now, what's the most common financial mistakes dentists make going into a PPO exit, and why does it keep happening?
Yeah, absolutely. So, I will actually say there's probably two mistakes that
Mm-hmm.
we see most often. One, and is just not having accurate benchmark of how their practice is
Mm-hmm.
doing. So, actually having those financial statements, the whole package of, an accurate profit and loss and a balance sheet, which is a portion that a lot of people don't realize is absolutely
Mm-hmm.
just as important as a profit and loss. That is probably mistake number one that we see. The second issue is being once again, solely reliant on production. Realistically, production is an important number, but production does not equal collections, especially when we're dealing with insurances. And then more than that, collections doesn't equal profit. And so we need to make sure that we're looking at the full picture. But if you're solely focused on, hey, here's our production goal for the day, we hit it, once again, hygiene was busy or so forth, does not mean that you're profitable. So you have to have the metrics and the financial statements, make sure those are accurate, and then make sure that you're looking at the full picture, not just the production that your practice is doing.
All right. All right. Now, what do the numbers actually need to look like before a practice is ready to drop a PPO? I think that's a very important question for our listeners.
Absolutely. Yeah. So there's a few things that you want to look at. First of all, you're going to deal with a big change in regards to the money coming in, right? So we're used to our
Mm-hmm.
billing with our insurances and the flow and the timing of that. So the first thing I'd always want to make sure is the practice can support some extra cash flow. So there's money
Mm-hmm.
in the bank in order to have this transition. So cash flow, I think, is an incredibly important thing to set up in advance. Another item, that we see is in regards to staff and making sure that that's accurate as well in what you're spending and that your team is very stable. We always want people to work with a dental consultant or a coach in order to help them with the process and the education to get this. And that's not my wheelhouse. But from a financial perspective, we want to make sure that what we're spending on payroll, as that's one of the biggest costs, is sustainable to get through this. And that team
Mm-hmm.
is set up once again in advance. Those really are, for me, the biggest things is cash flow and staff. In addition to that, I will say though, you want to once again have those financial records to make sure it's accurate. And on this particular case, that you're drilling down on how much of your practice is PPO based. Is it a 5% practice? Is it 35%? Which ones are you thinking about leaving? What's the impact? Get those metrics in advance, analyze them, see the change, and that's going to set you up for success as well.
Amazing, amazing. So I think I would like to take a pause and then give a shout out to Ekwa Marketing, who is sponsoring this episode. So I think we spoke about a framework that changes how you think about the whole transition, and the moment your finances shift, your marketing has to shift with it. So they're going after a completely different approach. So Ekwa Marketing is offering a complimentary marketing strategy meeting to help practices make exactly the move. So you can book that meeting at lessinsurancedependence.com/MSM. Now, Laura, let's talk about something that catches even the financial sharp dentists off guard. I think dentists are used to writing off insurance adjustments that it becomes a normal. How does that distort the picture of profitability?
It's a huge distortion. I mean, realistically, they've gotten used to fees that are really not acceptable. And so what I always like to see is that they're analyzing that production number, but also analyzing regularly what the adjustments are. I think a visual representation of that is very important.
Mm-hmm.
So if they're printing that day sheet and looking and seeing that they hit the goal, look at the production as well. For financial statements that our office puts together, we actually have the production number, the adjustment number, the collections number, and then all the expenses on one page because they should be looked at together. Because when I'm talking to a doctor about, the potential of leaving and, maybe they're, did $1 million in production, but realistically after write-offs, it's 700,000 if they're a heavy PPO office, or maybe it's even 800,000. When they have that tangible number in front of them of,
Mm-hmm.
hey, I worked $200,000 that I wasn't paid for the year or my team did, that's
Mm.
eye-opening. And so it's just getting out of, there's a comfort level, doctors might have been practicing this way for 10, 15, 20 years, where they are just saying, well, it's okay, this is what we got paid. But realistically, it's just too much money left on the table. And when they have that
Mm.
tangible amount of reviewing that number, seeing how much it is month by month by month, seeing how much they're collecting, seeing how much they're having to spend to run their office and that whole picture, it makes a tremendous difference to once again have your eyes open and realize that there's just too much money being left, and if they can go exit that PPO, they have a much better opportunity to have some success.
Amazing, amazing. So again, this podcast is about taking action. So if a dentist is thinking about dropping a PPO in the next 12 months, what's the very first financial move they need to make?
Yeah. So, I mean, honestly, I'm going to compare that to if you go to the dentist, what's the very first thing that they have you do, which is take an x-ray. And so it's getting
Mm.
that data. So for me, the very first thing to do is compile the financial numbers of where your practice is at. So it's that accurate financial statement. It's the full package, right? We need to see the production. We need to see the adjustments. We need to see the collections. We need to see the expenses. We need to see the net profit. How much money are you getting? But then it's the cash flow side as well. How much money is in the bank? Can we
Mm-hmm.
support this? How much debt do you have? Because obviously, as you're going through this transition, there's bills that still need to be paid. So the very, very first thing is what's the health of your practice financially? Where are you at? Where can you get to? How can you be successful in this? And that is absolutely the starting point in order to get through this successfully.
Amazing. So Laura, tell us about the Phillips Group. How can the Phillips Group help us help the community on getting more of your services, or how can you actually help our listeners?
Yeah, absolutely. Well, you had a great introduction for us, but like you said, we're a tax and accounting firm that specializes solely in healthcare, primarily in dentistry. I've been working in this industry for 20 years. I own the company with my husband Andrew, and together we're just extremely passionate about helping dentists. With that, you can reach us at our website. Is the best piece of information is learn about our firm, learn about our services, see how we can help you. That website is, of course, www.phillipsgrouptax.com. So PHILLIPS grouptax.com. You can also give us a call. Our phone number is 714-667-2311. And we're happy to get on the phone, learn about your firm, see how we can help. Because yeah, it's a different landscape out there. And the laws, tax laws are always changing, things are always changing. We want to move with our clients. So we're happy to, answer any questions that people have.
Exactly, exactly. So, for anyone listening in, you can always find all those resources in the show notes of this episode, and you can directly reach out to Laura and the company to get more expertise on this topic. So, Laura, thank you so much for spending your time with us today.
Thank you. Thank you very much for having me.
So the big takeaway is this: dropping PPO isn't just a strategy, a decision, it's a financial event, and knowing your real numbers before you make the move is what separates a successful transition from a stressful one. So if you're ready to take action and you're looking to do a practice audit on your marketing, on your or your visibility, you can book a complimentary practice audit with Ekwa Marketing at lessinsurancependence.com/MSM. And if you're looking for mentorship, you want coaching with your practice, you can also look for coaching with Gary at lessinsurancependence.com/CSM. Now, all these resources are for you to take action and for you to build a thriving practice. So, build the foundation first, the freedom follows. Thank you for listening to Less Insurance Dependence Podcast. I'm Lester De Alwis, and I'll see you on the next episode.